Hi everybody, this is Lara with your weekly video for the S&P 500 for the trading week ending Friday 8th of July 2022. We've had upward movement this week. It's been reasonable, but it lacks support from volume and range. Upwards movement is weak, and at the last low, sellers had not capitulated. And so, also with Lowry's really bearish, this analysis will remain bearish and expect that this upward movement this week is a counter-trend bounce. And I expect the next wave down to show an increase in momentum. The midterm target is 3400 and the final target for primary wave 2 remains the same at 3195. I will consider the alternate possibility that a low could be in place, but I judge it to have a very low probability. Elliott Wave analysis first. At the weekly chart level, the S&P is still expected to be in a bear market, continuing lower, labelled primary wave 2 and subdividing as a zigzag, labelled intermediate A, B, C, and intermediate wave C is extending. Minor 1 and 2 are complete, minor 3 is extending, minute 1 and 2 may be complete. This wave count expects a third wave down at 2 or 3 degrees within intermediate wave C to start to show an increase in downward momentum next week. The target for primary 2 remains the same, the 0.618 Fibonacci ratio, that's arithmetic, not log, at 3195.28. Primary wave 2 may not move beyond the start of primary 1, below 2191.86. At the daily chart level, let's take a closer look at the structure of primary 2 from this high up here. This high up here, labelled intermediate A, expanded flat for B, and intermediate C extending as an impulse with minor 1, 2 complete, 3, 4, 5 to complete. The target for minor 3 is for it to reach equality in length with minor 1 at 3400. If that target is wrong, it may not be low enough. Minor wave 3 is likely to extend, and so far within it, minute 1 may be complete here, minute 2 complete as an expanded flat, and minute wave 3 may be extending. This is really common for the S&P to have nested, extended third waves. I'll expect minuet 3 also to extend, and it looks like minute 3 and minor 3 may both be extending. Within minute 3, minuet 1 and 2 may be complete. If minuet 2 continues any higher on Monday, it may only be by the tiniest amount, finding resistance at the upper edge of this base channel. It may not move beyond the start of minuet 1 above 3944.87. Draw the base channel from the start of minor 1 to the end of minor 2, this high here. Place a parallel copy on the end of minor 1. The upper edge may show where bounces find resistance, and when the middle of minor 3 arrives, it may have the power to break through support at the lower edge of the channel. At the daily chart level, this is an alternate. It really doesn't make much difference between this and the main wave count, but the invalidation point is higher. I'd still be expecting, if we see any more upward movement, to see price find resistance at the upper edge of the base channel. This wave count still sees minute 1 over here, and instead of minute 2 over here, I've moved it down 1 degree, and I'm considering this may be minuet W, the first structure in a double combination. A flat correction for W, X, a zigzag for Y. That's a really common two structures in a double combination, one flat and one zigzag. Overall, moving sideways with minuet Y ending about the same level as minuet W, as they usually do within combinations. But the invalidation point is higher. If minuet Y continues further, I would expect it to find resistance here and not move too much above minuet W. But technically, minute 2 may not move beyond the start of 1. The invalidation point is 4176.90. This is important because that's the confidence point for a bullish wave count. Targets are the same, the base channel is the same. At the daily chart level, it's also possible that primary wave 2 could be over at the last low. The problem at the hourly chart level or lower time frames though is this downward movement I'm labelling minute 5 within minor C within intermediate Y within primary 2. Minute wave 5, when you look at it at a lower time frame, looks very strongly like a 3-wave structure, and this wave count has to see it as a 5. That's problematic in Elliott Wave terms. This wave count also does not have good support from classic technical analysis, and it diverges with Lowry's conclusion as they are very bearish. I'm really uncomfortable producing wave counts that strongly diverge with Lowry's, and so this is an unlikely alternate, published in the spirit of considering unlikely outcomes. So what if primary 2 is over? What could be happening? This wave count sees a new bull market beginning with intermediate 1 incomplete. Intermediate 2 may not move beyond the start of 1 below 3636.94. This wave count requires a new high above 4176.90 before we can take it seriously. Okay, classic analysis. At the weekly chart level, this week, prices moved within the week higher. It's an inside week, but overall upward movement within the week is showing quite a strong decline in volume. Resistance is holding at 3980. This looks like a weak counter-trend movement. No new signal from on-balance volume. RSI is neutral. There is still a downward trend, which is now extreme, but not very extreme. And with RSI neutral and not oversold, there's actually quite a lot of room below before this trend would become very extreme and be in danger territory of reversing. That's not here yet. Stochastics returning to neutral and ATR increasing as price falls is normal behaviour. Some green candlesticks this week. They lack range, they lack support from volume. This upward movement is weak, despite Thursday being an 80% up day. That's okay, pretty common to see those within downward trends as volatility remains high, even on bounces. We saw them back here, and yet prices continued lower. The resistance line for on-balance volume needed to be adjusted slightly. It remains below resistance and in a weak consolidation zone. At the daily chart level, ATR is now declining, indicating no clear trend as price is moving higher. The negative DX line remains above the positive. It won't take much to turn the ADX line back up and again indicate a downward trend. RSI and stochastics both neutral and ATR declining as price rises is normal behaviour for this market. Let's take a look at breadth and volatility to round out the picture. This week, prices moved higher within the week, the AD line slightly increasing, no new divergence at the weekly chart level. This prior long-term bearish divergence has now been resolved as both price and the AD line have both made new lows below that prior point, so there's no long-term bearish divergence anymore. At the daily chart level on Friday, prices moved slightly higher, a really small range day, very weak upward movement. Breadth has slightly declined during this session. This is bearish for the short term. There's a little cluster of bearish divergence. This indicates the weakness within this upward movement. It lacks support from volume, range and breadth. That looks like a counter-trend movement. At the monthly chart level, I'll keep publishing this, there is extremely long-term bearish divergence between the Nasdaq AD line and the S&P 500 price. The Nasdaq AD line has made new lows quite strongly below lows of March 2009, and yet the S&P 500 is a lot higher. This downward movement in price for the S&P 500 for the current bear market is extremely strong the breadth is extremely strongly declining within Nasdaq, not so much though within the NYSE All Issues AD line. This is very bearish, but we've seen this before and yet price continued on higher in a bull market. So on its own, it doesn't mean that this bear market for the S&P has to continue a lot lower. It doesn't mean it has to make new lows below March 2009. We need to see other things align before I'm going to consider that as a serious possibility. By other things, mostly I mean the NYSE All Issues AD line, and we've got too much bullish divergence between price and VIX for the current bear market to be particularly strong. There is shorter term bearish divergence as well. This is March 2020. The Nasdaq advanced decline line has made new lows below its prior point in March 2020, whereas the S&P 500 price has not. This divergence is bearish and long-term, adding to that long-term bearish picture. However, we're seeing quite a lot of bullishness from inverted VIX. This week, prices moved higher, but it hasn't made a new high below this prior swing high. Inverted VIX has. This divergence is bullish. This bear market for the S&P 500 is not coming with a normal corresponding increase in volatility. There is weakness in this bear market. VIX and VVIX have both moved lower this week. VVIX has made a new swing low, but VIX has not. Volatility of VIX is depressed. This divergence is bullish for price. And at the daily chart level, we're seeing also bullish divergence. On Friday, prices closed slightly higher than this prior session back here. Inverted VIX, slightly lower. Prices closed very slightly lower, and yet inverted VIX has moved quite substantially higher. This divergence is bullish for price for the very short term, and we see also this longer term divergence between VIX and VVIX that we also see on the weekly chart. So if the NYSE All Issues AD line had long-term bearish divergence and VIX wasn't showing bullish divergence, then I could be more bearish for this bear market for the S&P 500, but there's weakness within it. I don't think the low is here yet. Lowry's remain bearish, sellers haven't fully capitulated, and the Elliott Wave structure is incomplete, so I'll expect an increase in downward momentum next week. That's all from me this week with your S&P analysis. I hope all our members are having an awesome weekend. And thank you so much for your patience in having this analysis published on Saturday, not Friday.